Welcome, everybody. I'm pleased to be joined by Logan yet again at the third and final chapter of a new series that we're doing together. I believe Logan said this is the first time he's going to do this one. So we're excited to be the platform to finish this up on. And this is all about the let's hope we all get here thing about after the round closes in terms of your fundraising round. So if you joined us for the two previous episodes of this, we did preparation called Sharpening the Axe, calling this whole series Art of War, which is all about how to get your stuff together, your ducks in a row when you're going to start a funding round. Then we did the actual execution of it in terms of getting investors, running a fundraising process, negotiating terms, the whole thing. And now we're going to be like, oh, well, we got the money in the bank. So like everything's great, right? We don't have to do anything with these investors for another 24 months. Completely wrong. Well, not completely wrong. It totally happens in the industry. If you talk to angel investors in particular, and you ask them how often do you get, updates from your portfolio companies? Yearly, maybe quarterly, who knows sometimes, but that was the ways of the past and things has changed. And I believe, and I know Logan believes entirely that you can get a ton of value post investment if you actually engage with your investors, work with your investors, update your investors, and again, run it like a process. Don't just, make it up. Don't send a templated email, but there's some good stuff. There's some really good stuff that you can do. And I will say to begin this intro, if you've done any of the program with in the past, the entire reason Logan and I know each other, that Gus and Forecastr even work together, is because of Logan's investor updates. And I wasn't even an investor in the company, but back when we met him, I don't know what, quarter one of Forecastr or something like that.
Like that. Yeah. It was wild.
Yep. Super early days. He was like, hey, I think there could be a cool partnership between Gus and Forecastr. And I said, hey, you seem like an idea stage company. No way, no how, but I really like you. And what you're doing is really cool. And he threw me on a list of investor updates that, came to my inbox for years. And I would, read them. Sometimes I'd reply, he'd check in occasionally. But that greased the wheels of a corporate partnership or a friendship and all sorts of things that has fundamentally changed both our companies in the future. Now, we're not investors necessarily. It's not that, but I believe Forecastr particularly is well poised to speak to this topic because I think they have leveraged this approach and the details of it in a way that has been great for them and is a great model for other startups because times are changing and investors expect more, out of the companies based on, technology shifts and things like that. So as always, we're going to record this. Please engage, interact in the chat. Go to your startup name, where you're coming from. Use the Q&A. We will have time for Q&A at the end. I'll also probably interrupt Logan occasionally for relevant stuff. Recording will be sent out. Q&A is good. And we will send out everything a couple of days after the event, including links to you get Forecastr discounts for being part of this thing. You get awesome resources that they have. So be on the lookout for that in the next couple of days. Logan, take us away.
Will do. Before that, we did have a very good question already coming in the chat. Whenever you do your follow-up, are we going to do the links to the previous two that we did as well?
So that'll be in the follow-up. I will throw them in the chat too while you're kicking things off, Logan.
Love it. Okay, awesome. So I'm going to go ahead and share my screen and we're going to go ahead and get this thing rocking and rolling. I don't even need to say it at this point, Ryan, but I'm going to say it again just anyway. Huge overlap in both of our knowledge sets here. So please interrupt me if you have a point to make. Would love it. Welcome it. That's one of the reasons why my favorite events to give are guest events, is because it's more of a conversation. And same to everybody watching this. If you have an idea or a question or a comment or anything, throw it in the chat. I love keeping these things conversational. That is, to me, what brings the most value. So, Ryan already talked a little bit about kind of the preamble here and what we want to talk about. But just to restate it, we're going to talk today about what do you do after you've secured the checks from founders, right? You've already closed the money, you've got the money, it's hit the bank account. What do you do to keep them informed and happy? As Ryan said, a lot of people, they get the round done. They're like, all right, this is done. Like, I don't have to talk to these people anymore. I don't have to think about these people anymore. I've gotten their money. They can't take it back. I am good. A lot of times founders forget that the most likely sources of new capital come from people who have already invested in your business before. Your existing investor base has already done due diligence on your business. They've been following you very closely. They're the most likely people to cut checks for additional funds whenever you need them. So your job as a founder, as a fiduciary of the company, is to put yourself in a position where this is most likely to happen, that you're going to want to make sure that your investor base is informed and happy. So at that point in time, when you need more money, they're going to be ready to jump in and write you a check. And this is not only beneficial to you as a founder or an operator of the company, but like it's just the right thing to do. It's just fundamentally, I think, the right thing to do. Investors took a leap of faith in you, they invested in you, so it only makes sense to reward them with transparency, proper communication, just to say, hey, that investment that you made, let me tell you how it's doing. Let me tell you what's going on. Let me just be honest and frank and transparent with you. It's just, as a human, the right thing to do. If you ask most investors, and I think Ryan could testify to this as well, because we have asked a lot of investors what they view, like what do they look for whenever they come to the investments they made, what are their favorite things about some of the founders that they do. They rank transparency among one of the highest values that they look for in founders that they invest in. So today, that's what we're going to talk about. We're going to teach you how to communicate appropriately, how to be appropriately transparent to investors. And I'm going to show you real tools, real examples. Like Forecastr is a very transparent company. So I got a bunch of, like, you can probably already see in my tabs that I have ready. I'm going to show you real investor updates. I'm going to show you real KPIs. I'm going to show you real financial models, all of that good stuff. So it's going to be hands-on, hopefully very, very helpful, very, very useful. And we got a lot of content to dig in. So I'm going to dig in right now. Before I get too deep into content, I really just need to augment this slide, Ryan, where it's like just me, because I feel like Steven hasn't been on one of these events in a while. But I'll just a little bit of background on myself. I'm Logan Burchett, co-founder, chief operating officer over here at Forecastr. So I'm going to be talking a lot about fundraising today. I'm traditionally just a finance, nerd. I was a fractional CFO for a number of years, built a bunch of financial models, love finance, love data, love metrics, all of that good stuff. I have been on the other side of the table, so to speak, as a fractional VC analyst. I've been that person having to chase down the information that we're going to be talking about today. So I know that this is going to make a lot of investors' lives easier. Steven is my co-founder. You can see him on the slide next to me. He's not going to be joining us today. But I have a deep background in fundraising. Forecastr's raised just shy of $10 million to date, and finance. And this is the type of stuff that I really enjoy. This stuff that really gives me a lot of energy.
And I will say, it is a little chilly here in New Jersey, but I also wore a jacket today because it was Thursday, on the off chance that Steven would show up and give this presentation, because he always wears a three-piece suit on Thursdays. And I thought I might need to compete.
Yeah, that's a great point. If he was standing here, I'd turn my screen to show you, because he is fully in a three-piece suit right now. But it's a fun fact. For the past, I think, 10 years, he's done three-piece Thursday. Only person that does it, just him, every day, or every Thursday, puts on a three-piece suit. Wild. Okay, so I'm going to talk a little bit about what Forecastr is, because I think that's very important. So the way that I like to describe Forecastr is that if you look at any larger, more successful, more established company out there, and you look at the organizational structure of these companies, you're going to find that they all have one thing in common, one department in common. It's called FP&A, and that stands for Financial Planning and Analysis. Now, the entire purpose of that department is to analyze financial and non-financial data, to gather insights from that data, and to forecast it in the future to make really good, strong decisions. These are things like, who can I hire? What is my cash balance going to look like? How much revenue am I going to generate under a variety of scenarios? So this is a ubiquitous, type of department that exists in pretty much every major, larger company. And if you're a smaller company, like a startup or an SMB or something like that, you don't have the resources or the budget to go out and hire a fractional CFO or a full-time CFO and a team of analysts to build a 50-tab spreadsheet that you have to keep up to date. It's just not something that you want to do, should do, anything like that. So that's why we built Forecastr. Is we built a great software that can take all the great pieces of FP&A and then distill them down into an online integrated web app. And we pair you up, every one of our customers, with an expert financial analyst that is going to build a custom financial model for each one of our customers and do customized reporting for those customers, just to make sure that they get the true value of FP&A out of it. So we've got just under 700 customers that have been using Forecastr to date, and we are a startup too. We're just shy of $2 million of annual recurring revenue. So it's been a fun ride. And if you're interested in learning more about Forecastr, we'd love to work with you. Jimmy is going to throw a link to get in touch with us in the chat, and that's how you will learn more. Okay, so to go through a quick agenda today, we're going to talk about the importance of keeping an investor informed, setting up a good cadence. So like, how should I think about transparency? When should I do it? All of that good stuff. What should I tell them, right? What are the things that investors actually want to know? I'm going to open up the toolbox. So I'm going to show you the different tools that you can use in order to keep investors happy. And then I'm going to give some real world examples using Forecastr's own resources that we use, that not that we produce, right? So when it comes to keeping investors informed, you can generally think of things in terms of offense and defense. We talked about this a little bit, I think, in previous webinars, but this is a good way to think about it. So when I talk about defense and keeping your investors in the loop, I'm talking about keeping them informed so that they're not taken aback by any negative surprises that pop up, right? They're not like caught off guard by something bad that happens. So take Forecastr, for example. For a while, our biggest challenge is customer churn. Our revenue retention is very, very high. Customers that stick around tend to buy higher price packages, but a lot of our customers churn because they fail. They run out low on cash and they fail to keep up with their financial model. And that's one of the first things that goes, unfortunately. Now, instead of hiding this reality from our investors, we actually put it out front and center in all of our investor updates. And we ask for their help in overcoming this challenge. And we put our tribe to work for us, right? We got a tribe of really smart people that we want to put to work to help us solve this problem. We report on this metric every single month. We call it out specifically, letting them know that this is an area that we're focusing on. This is an area that we've historically had trouble with. That is a big area of focus from the management team. And we do this because it's the right thing to do, but also it's just a good defensive strategy when it comes to investor communications. We don't want our investors to feel like they're caught off guard whenever they dig through their metrics and you dig through our metrics and they find the customer churn is high. If we don't call it out, it seems like we're trying to hide something from them. And that's definitely not our intention. We take our problems and we put it out right in front of them. And, an investor is not going to be happy, for example, also that if we had trouble fundraising because one of our metrics was in trouble and that was the first they've heard of it, it would catch them off guard and it would not be a good look on our end. So we want to keep our investors fully in the loop as early as possible so that we can set expectations accordingly and they can help when they can, right? It's defensive in a few ways. So firstly, it protects you against the negative interactions that can occur when investors are caught off guard. Nobody likes to be blindsided. And when you're hit with a surprise issue out of nowhere, it can do a lot to damage the relationship despite your best intentions. We want to protect our relationships, not damage them. So we want to be proactive and defensive whenever it comes to making sure that our investors are well informed. Secondly, though, investors are smart and they can help you work through some of these issues. So in our example with churn, we have some investors that are helping us think through a customer success campaign and helping us with operational adoption of the platform and things like that. We never could have gotten help with this problem from our very, very smart and capable investors if they just didn't know that it was an issue. Right. So most of us that have fundraised, we have an entire army of really smart people out there that are willing and incentivized to help us out. And keeping communication open is a really great way to activate this resource. And then the last way that it's defensive is if you communicate proactively to investors, they're not going to have to ask you for things that they want to see, right? It's going to reduce the number of information requests that you get from them. So I'm sure everybody on this webinar has gotten a random request for, hey, can you send me the last 3 months of financials? Or, hey, can you give me a status update of a fundraise? Or maybe can I check out any of the open positions you're looking to hire? Things like that. Just answering these types of questions can take time away from you executing, operating on your business. But if you can be proactive and you can have a certain cadence for communicating the important stuff, the stuff that's really going on regularly, is going to severely cut down on the number of these requests. That's going to protect your time, right? That's a defensive play, and that's going to help make sure that your business is running smoothly. So those are the defensive reasons for keeping your investor informed. But on the flip side, it's also an incredible offensive strategy when it comes to fundraising. So I already touched on this, but your easiest source of new capital in the future is likely to come from people that have invested in the past. These investors, they have vetted you. They've already seen what you're doing, and they're emotionally bought into your company. They have an emotional stake in your company, and they've given you the green checkbox, so to speak, and they certainly don't want to see their investment fail. So you want to keep these people as happy as humanly possible, because when push comes to shove, they're the most likely sources of new capital. Informed investors are happy investors. So a good cadence of communication is really going to help with all of us, right? Also, if an investor is informed on things like runway, cash, et cetera, all of that stuff, they're going to prepare their bank accounts, right? They're going to know whenever there's a potential cash shortfall, and they're going to prepare accordingly. So they may even, do their own cash planning, preparing to carve out a certain investment, amount of money or whatever, preparing to write a check for additional funds because they know you're running up on the end of your runway. But the only way to set yourself up for this is to be proactive and properly communicate. So in addition to more capital, investors are also great sources of customers too. So that's another good offensive strategy, like things like talent, new customers, new partners, all of that. Like I said before, you already have a network of really smart people that are just waiting to jump in and help you run the business. And it's a shame not to activate them. Just let them know what you can use help with. They're going to do their thing to jump in and help you out. So in summary, you want to keep them informed. It's good defense. It's good offense.
I want to bring up one thing that I find is pretty helpful and something that not a lot of founders realize, especially if they don't come from the background of angel investing themselves, is a lot of angel investors are very high net worth individuals, but low liquidity individuals. And I think this is something that a lot of founders don't realize, and they get really surprised if they go out to somebody and be like, we're doing great. You love our company. Like, can't you just like give us more money? That investor, and to Logan's point about like allocating capital and being those investors being strategic, they deploy significant chunks of capital to companies and then it sits for 7 years, 10 years. A lot of times they have different obligations. A lot of times they have spouses who say only this much of the family budget and things like that. So keeping them informed, and as ridiculous as it sounds, if somebody's like 100 millionaire and you're like, well, why can't they just write a check off the, beat? It's because one, some angel investors aren't 100 millionaires. They're decamillionaires. They have a long-term play for this thing. This is, they take this seriously, but that doesn't mean that you can just hit them up for $250,000 checks, at a drop of a hat. Planning this stuff out and making sure, because if they really do like you, if they really like your company and they believe in it, they will prioritize it. But if it's a surprise to them, you might catch, a super well-known, high-named investor who would love to be in the round, but literally just says to you, I can't, I just wrote a check to something else because I had no idea that you guys were going to run into this.
It's a great point. Great point. All right, so now I want to talk about setting up a cadence of transparency. So just have a standard cadence of communication, how you want to run this playbook. And so we've broken things down into monthly, quarterly, annually, and then evergreen as well. So monthly, we recommend sending out company updates. This is what Ryan was talking about, right? It's just something that you want to send out a regular cadence of communication, talking about the important things that are being done. PaperStreet is a incredible solution for this, and I'm going to spend some time actually going through PaperStreet and the company updates that Forecastr sends every month, just to give you an example of how we like to structure these. I talk about this all the time. I can't overstate the importance of these monthly updates. Like, it's low cost. It really doesn't take that much time every single month, and it is worth its weight in absolute gold. They really, really work wonders. We actually do a monthly company update for our investors and for our entire community, which is basically anybody and everybody that we've met that's on our radar and we think would be good to get regular updates from us. I think right now we have over 1,000 people on our company update list that we just curate and say, if we are interested in you, as a partner, customer, or whatever, we just put you on our company update. So I attribute a lot of our growth and success that we've had to just a regular cadence of people coming up to date. As Ryan mentioned, I might not be standing here giving you all this webinar if we didn't have monthly company updates, right? The monthly updates should include all the important metrics like growth, financials, people, product, all of the important stuff that you would want to know if you were an investor, right? Things that are interesting that you would want to know about the company. I think it's good to include in those monthly updates. And the great thing about using a software like PaperStreet is that you can keep record of all of those emails that you've been sending, and it's really easy to sort and go back and look at what's done. And it's great for due diligence because it allows you to keep a record of all the communication that you have and organize it really, really well. And if you do it right, it's actually kind of cool, and you'll see this, that it gives you kind of a timeline for your company, and investors love to see that. Plus, it's really cool just to be able to go back, which I do sometimes, and say, I want to go back to 2020 and read the email that we sent out to people in, March of 2020. Let's just see the stuff that we were dealing with then. And it's kind of a trip down memory lane, which is really nice. And investors sometimes like to do that too. So can't recommend it enough. It's super easy. It's worth its weight in gold. If you take one thing away from this webinar, it's start doing company updates, right?
I think it's also a really good way to institutionalize tracking the information that matters and using it. Like, if it's hard to write an investor update email, chances are you don't have enough information about the state of your business. You haven't looked at what your challenges are. You haven't looked at what your recent wins are. And if you don't already have an internalized process for that, having an artifact that you have to produce on a monthly cadence is a fantastic way of getting that together.
Yeah, it's great. It's also weirdly a great motivator. Like, if you sit down and you're trying to write a company update and you're having trouble coming up with things that have happened in your startup, like important things, like exciting things, things like that, like you should be kind of embarrassed to send a monthly update. You know what I mean? Like it's a good way of that to kind of motivate yourself to say, I want to share this with my tribe. I want to share this big partnership that I landed. I want to share this big customer that I just, closed. Like I want to share this important revenue milestone, all of that stuff. Like it's a good kind of motivator for just pushing a little bit harder and just making sure that all the cool stuff that you're doing, it's hitting your audience well. And it's just all around, it's a good practice. So
I have a question for you, Logan. Do you send this to your employees as well?
our employees do get it. Yep, that's right. Yeah, everybody that's an employee at Forecastr, we're, like I said, transparency is a big part of our culture. So all of our employees have access to our financial model, which means everybody knows what everybody makes. Everybody knows what the cash in the bank account is. Everything. There's no secrets really in our company. And so yeah, they all get our updates, everything. So yeah.
I just thought of that because one of the things we have a monthly cadence internally. We have a lot of investors to cater to, fortunately or unfortunately. But what I was thinking about is, a lot of times, especially as your organization grows, the message can get easily diluted, between, all of a sudden it's, you're the COO. It's like there's, 2-3 degrees away from you, a sales op engineer or anything like that.
Yep.
And at a monthly cadence, I think a lot of times when people ask, like, what does a startup need? It's at every tendril, from the investor to the lowest employee, not lowest in terms, but just like most recently hired, least skilled, least experienced employee. But if you have a cadence of both where we just won and what we need help with, that makes everybody in the organization able to answer that question. So the serendipity of, if you're like, oh, I'm a startup, and regardless of the person who's saying that, we need help with this, you will be surprised, I would imagine, where all of a sudden things can flow up chain with that kind of cadence, rather than being like, I don't know, maybe like talk to our CEO and he could help you out or something like that. Or even just hearing something like, oh, my friend just, left a job in this exact role that was in the last investor update that we need to hire for. Like, maybe I should just introduce him to my company. That's great.
Happens all the time. I mean, like, just if you need something, ask for it. You'll be amazed at what happens. So that's monthly, right? And well, like I said, we'll go through that a little bit more and give you real world examples. Moving down to quarterly, we recommend doing a virtual meeting that's optional for all of your investors to attend, kind of like a virtual, like AMA type of thing. And it's great because it's an open session that allows for interaction between you and the investors among themselves. It's a great way to foster community among people that everybody's rooting for your business, and it can really spark some interesting conversations that, some things are great ideas that you want to act on. Some things are just kind of ideas that you'll never act on, but it's interesting to just hear other people's perspective on it. It can just foster some really, really cool stuff. And what I usually recommend doing for these types of meetings is just keep it very light on programming. And you want to structure it around with some very, very high level slides, but mostly it's Q&A. Mostly it's open discussion. And just so we recommend not overly structuring these meetings, because it's just a really good time to have free flowing discussion, and you don't want to stifle that, So typically what we like to do is throw in maybe an hour long meeting. Maybe it's like 15 minutes of like really quick updates of just the highest, most important things. 45 minutes of just, this is your time. Ask us, we're an open book. Ask us anything that we want, right? Just even having the option to join one of those goes a really, really long way for your investors. And then annually, this is kind of a little harder in a post-COVID world, but we recommend, if you can, try to do one in-person investor event. And so if you can't swing this, virtual is also great. That kind of goes along with the quarterly one. But, it's again, attempting to foster the community within your business, right? We try to keep investors informed, of course, but we also are trying to actively get them to engage with each other and with your business. And in-person meetups are a really, really great way to do this. So that's kind of how we think of things monthly, quarterly, and annually. And then finally, you can see this big one here at the bottom. We strongly recommend that you consistently maintain a data room that can be used at any time. And so I'm going to go through an example of our data room towards the end of the presentation when we go through the granularity of like what we actually do. We've got even a template of our data room that we'll have Jimmy share with you all. So that'll hopefully be helpful. But a really well executed data room could go an incredibly long way in making you look really, really great, not just for a fundraise when you go into a fundraise, but also after the fundraise, just in case there's any questions that anybody has. I'll go back to a quote that I quoted at the very, very first one of these sessions from Abraham Lincoln when he said, if you had 6 hours to chop down a cherry tree, you spend the first hour sharpening the axe. And putting together a data room is one of those axe sharpening activities. It'll make you look really buttoned up, professional whenever it comes to fundraising. And it'll give your investors confidence that if they ever need any information, first stop is the data room. Look in there. If it's not there, then they can ask you, right? That's kind of the idea. So all the time, like every month we go in, we input new information in our data room just to make sure that at any time it's always up to date. It's super, super helpful. Okay, so we want to talk now about what investors want to know. There's a lot of areas in your business that you can report on, but I like to break things down into the main components of your business and focus on the key reports and metrics that investors are going to be interested in seeing. So to keep things simple, we broke things down into finance, people, growth, product, and then challenges. And you can kind of customize this a bit for your business, but that's generally the way that we like to think about these things. So on the finance section, you're really going to try to articulate the financial health of your company at that point in time. And specifically, you want to convey how you're doing on revenue, which is going to be the top level health, and cash and runway. So we recommend including a full set of financial reports in your monthly communication with investors. It's going to help give them a level of fidelity and detail to where they can dig into any area of the business that they choose to. Specifically, though, you're going to want to call out how you're doing on revenue and cash so that they can just really quickly get a super high level sense of your business. If I just look at those two things, I can quickly just understand at a very high level the health of the company. And while you're reporting on these financial metrics, it's important to give the investor a sense of how of like what's actually coming to fruition and how it's squaring up with what you thought was going to happen. So this is where forecast versus actual report is so important, because it gives investors visibility into what you thought you were going to do or what you were planning on doing or what you were going to hope to do. And then how does that measure up against what you actually did? And it helps give the investor a level of understanding of predictability that you have over your business and the ability to trust those forecasts going forward. And it's also going to give them a really quick sense of where things aren't going as planned. So which metrics are kind of diverging from management expectations. So like what's going right, what's going wrong, all of that. I included runway last, but it's arguably the most important whenever it comes to regular communication with investors. Runway is oftentimes a matter of opinion. So it's always good to give an investor a rough estimate of what you believe your runway is at that point, with bounds of margins or errors. So for example, your runway may be dependent on you hitting a certain top line revenue forecast. That may or may not be aggressive, but it's kind of just what you're shooting for. So it's always good to include a runway estimate if you don't hit that forecast as well. So you might say something along the lines of, we're currently estimating our runway to be between 13 and 15 months, depending on our revenue targets, and expecting to raise additional funds anywhere between 6 and 8 months from now, right? That's like a good way to just concisely let them know where the business is. And it's also going to encourage you to share your corresponding financial models that support those runway estimates, which are going to be really important. So those are kind of the finance things that we like to talk about. Growth is obviously going to be really incredibly important component of the business, and investors are really going to be interested in understanding the trajectory your company's on a month-to-month basis. So, this is where it can kind of go into customize for your business. There's a bunch of sales metrics that you can report on. Depends on which business model you have that pertain to you. So we just do a couple of the popular ones like new sales, sales velocity up here. You may also report on things like number of new partnerships, new signups, total bookings. Again, just totally depends on where you are, but whatever is important, just report on it monthly. We tend to think of these metrics in terms of awareness, acquisition, activation, retention, and referral. So we like to carve out metrics for each portion of that funnel and give a very high level update on all of these. So it gives you a sense of anticipation of new sales through awareness, efficiency of the sales process through acquisition, your ability to create active users through activation, your ability for your team to hold on to those customers through retention, and give yourself, your team's ability to upsell through referrals. So that's all of the different areas of growth that we like to orient ourselves whenever we think of these types of things. And it's really important to update investors on your people as well, not just to give them a sense of the evolution of your team, but also keep them in the loop of your hiring process. So this is something that Ryan said, like if you're looking for a certain employee or for a certain type of person, go to that monthly update and say, we're hiring so-and-so, we're hiring for such and such. I'm looking for somebody with this background. Investors have great networks, super, super helpful, and they're going to help you build that team. And it's just, it's worth its weight its gold whenever it comes to recruiting, which is really important. From a product standpoint, investors are always going to want to understand just how your product is progressing. And if you're the founder of a tech business, it's a huge component of the company's value is the technology. So we like giving updates on just, again, whatever makes sense for your business, but things like number of new features that have been released, features currently in development, features that are in your roadmap. Even sharing your roadmap can be a really, really good way to maintain transparency. And if you give these every single month, investors are going to get a sense of your velocity and your ability to release code. A lot of investors are ex-tech entrepreneurs, or they are current tech entrepreneurs. Giving them a peek into the velocity can really help them understand how they can lean in and help as well. So again, whatever products, specific metrics make sense, I would focus on those. And then finally, we like to end on challenges. Just what are the things that are going wrong? What are the biggest problems that you're focusing right now? Be very honest, be very specific, ask for their help. Blatantly in the update, say, I need your help with this. This is my problem. If you could help, with a 1 hour session, if everybody knows how to tackle this, help us out or introduce us to somebody that can help us. It's a big way just to get your tribe working for you, and it's super important. Okay. So there's a lot of different ways for how you can manage some of this data. And a lot of this comes down to your budget and your preference. And, we went ahead and created a list of some of the common resources that we found to be helpful whenever it comes to communicating and being transparent with investors. So generally, we recommend trying to set yourself up for scale. That's just a general rule of thumb that we like to follow. So software solutions usually scale better than homegrown spreadsheets. Most companies start with being done in spreadsheets, and then there's software that evolves from it because it's just more efficient. So if you have the wherewithal in your budget to afford some software, we definitely recommend doing that where you can. So there's just kind of like a lot of like different areas in which you can kind of look at and kind of choose where you want to use different things. So if we're looking for data room, so Card has got a data room. I believe Ryan Gust has a data room, if I'm not mistaken, kind of like a data room product. I know you have like in your profile a lot of different ways. So great ways to do that.
We have three depending on where you're coming from. Gus has three. So if you're a Gus Launch customer, your Gus Launch account is basically your entire corporate history, absent a couple key things like product documentation and stuff like that. That would be part of a fundraising process, but it's literally your cap table, your whole corporate history, every contract you ever signed, proof of your entire thing. If you're not as lucky to be a Gus Launch customer, we do have a cap table management platform that also has document sharing functionality, so you can model your cap table, upload all the documents, and then upload anything else that would be, and fine-grained access controls for investors and things like that. And then your Gus company profile, which you'll fill out if you ever apply to an angel group or an accelerator or just log onto the Gus platform, creates a data room per relationship. So if you apply to the New York Angels or Hyde Park Angels, they will have a two-way data room where they can request documents and things like that. Often, and the world is trying, and we are trying to be like one data room to rule them all. It is fragmented still. It's the same documents that you might have to put into different places during a fundraising process. But I think what Logan's talking about is after the fundraising process, choose the one that makes the most sense to you to keep a long running thing. Like, all right, all my investors invite you into here, and this is where we'll keep going with updates and stuff like that. But if you apply to an investment organization, depending on what tools they use, you might have to replicate that data, but it's good to have a source of truth somewhere that works for you.
Big time, big time. Yep. So there's a couple different options. We threw Dropbox and Drive on here. If you have, falling on a budget, that's another, good way just to build out a data room. When it comes to financial modeling, up until recently, Excel and Google Sheets has been the ruler of them all. But of course, Forecastr exists to take that away from them. We are the scalable version of that, something that's going to set yourself up for future success, something that's going to be a lot easier for you to maintain and communicate with. So, but if you are balling on a budget, we do recommend still Excel or Google Sheets if you're not quite ready for Forecastr. We also have templates available for download on our website that can be really, really helpful. So those are great for financial modeling. Investor updates, can't recommend PaperStreet enough. That's going to be my number one recommendation here, and that's what we use. So I'll go through those, what that actually looks like here in just a second. You can also use pretty much any kind of mass mailing agent. So MailChimp is another great one. MailJet, I could add like 50 more on this one, but just pick something that works for you, something that you can really scale up with, and those are going to be great for investor updates. For the record, PaperStreet is built specifically for investor updates. So things like MailChimp and MailJet, that's just for emailing generally. PaperStreet is specifically for investor updates. So that's why we like it. And it's pretty cheap too. Then other metrics and KPIs, again, you can just use the homegrown spreadsheets for this one if you'd like. Forecastr has metric tracking as well. We like to track a lot of our metrics in Forecastr, or you can just use something like Airtable. There's some cheap options out there, and just pick what works for you, pick what's easiest for you, pick what works best for your business. But just make sure that whatever you do is something that you can scale up, something that you can use for a while, something that you can communicate with, because that's going to be ultimately what's the most important.
And Logan,
now,
I believe if you're keeping good track in something like a Google Sheets or Airtable, like you can graduate into Forecastr at some point, right?
Correct. Yep, that's exactly right. And eventually we'd like to integrate directly with Google Sheets and Airtable. For now, whenever you do move into Forecastr from there, your analyst will be updating your model with all of the relevant data. So yeah, it's not a this or that. It's a you can do this and then move on to that in the future. So okay, so I want to show you real world examples of how Forecastr applies each of the things that we just talked about. So we're going to look at a data room, financial model, investor updates, and then our metrics and KPIs, and then we'll open it up for some questions. So for our data room, this is more or less how we recommend structuring a data room. We use Google Drive because we set it up whenever we were really early, and we just haven't moved away from it. It's been working for us, since then. But we like to organize it to where you can just kind of get a sense of where all the data is. So you can see it's clearly labeled, it's numbered. You got corporate and organizational docs, finance docs, investor deck, forecast, financials, all of that stuff. It's all there. One pro tip that I think is really helpful, and this was something we learned from Techstars, is an investor memo. So if you go in here, you can see that we actually wrote the investor memo that an analyst at a VC firm would write to pitch this to the managers of the fund. So the way that venture capital usually works is you'll have an analyst or an associate that you meet with several times. They then have to go in and write an investment memo, and then they have to pitch it to the GPs of the fund, and then they will go in and then they will make further recommendations there. We just wrote that memo for the associate, so it's in our language, so it does everything we want it to say, right? So that's just kind of like a little hacky trick, which is really great. We also have our winning manifesto in here to show how we're going to win, the different things that are important to us, all of that. If you're an investor, it's super, super helpful, and it's just a really good way to show front and center everything that we're proud of and everything that's valuable to us. But we could also even go into things like all of our employee agreements. So I'm going to go into founders. I'll even just show you mine, so you can see here's my, equity award and all of that stuff. Here's, post-merger, all that, just all of the important documents that you'd be interested in seeing. It's all here, right? It's all organized and all of that, which is super important. It shows that you're buttoned up. It shows that you care. It shows that you're organized, and it's just going to show really, really well for investors. So it's super important. I'm going to go to PaperStreet because this is the one that I think is probably the easiest to do and potentially the most impactful of all of these, except for, of course, Forecastr. So if you go into PaperStreet, you can see that these are updates that we send. So here's my, Forecastr update that was sent in July. Here's my Forecastr update that was sent in June. I can load more, and I can go all the way back May, April 2023. I can go all the way back to 2018 before the company was even incorporated, back whenever it was just an idea, from Steven and I. I can go in here, click read more. I can see this was my growth, my product, my people, my finance. This is the ask, like we're trying to, introduce us to accelerators, right? That was the ask for that month. Link to financial model. Here's all our data. This is where we're at 1.4 million of revenue. This is the highlight reel. This is all the cool stuff that happened. This is the challenges. This is the ask, right? Like all of this stuff. It's so important. And like I said, I think we had like 1,000 people get this email, and 1,000 really curated, smart people, like investors, partners, like people that really could help us. They all get this email, and they do help. Like they will jump in and help. So it's super important. And it's easy to do, and I just can't recommend it enough. I'm going to jump to Forecastr really quick just to show this is our financial model. So it's got the big three financial statements: the income statement, balance sheet, statement of cash flows. If you use Forecastr, it kind of kills two birds with one stone, because I can show you our forecast, of course, but then I can also show you all of our accounting data too, because we integrate directly. So I can even turn the forecast off if you just wanted to see our income statement, then turn this on. I can show you variances. I can dig deep into like each individual kind of line item of the forecast, all of that stuff. And this is something that we would help you build, if you were to become a Forecastr customer, totally custom to you, and you could just include this, and it's something that investors could dig into on a granular level. And they can see things like customer acquisition, revenue streams, all of the people that you have. There's just tons and tons and tons of data in here that's super, super helpful for investors. And one of the most important pieces is this statement of cash flows, where they can see exactly what you're projecting your bank account to be. And they can see kind of when you hit that low point, so that they can budget when they want to, write additional or a check for additional funds. So it can be very, very important, very impactful. And then finally, if you have any other questions about our company, this is our metrics and OKR sheet, where all of our investors have access to this. These are our company KPIs. These are the most important KPIs. This is our Series A scorecard, all the metrics that we have leading to a Series A. Here's our revenue and customer KPIs, right? And we have this segmented out. We go a little bit crazy with KPIs here at Forecastr. We have a bunch of them. Here's our engineering KPIs, product. Here's our growth. So you can see all of the different channels that we have. We can go into cost, all of our CAC stuff, all of our customer stuff. I mean, you can see we have 600 lines of metrics in our doc. So there's just a lot, that you can dig into it to really understand the business, which is really, really helpful if you're an investor that really wants to dig in. And I see that there's the chat has a bunch of questions going in. So I will end it here with a discount off of Forecastr. So it's a special offer for everybody that's on here with us today. Just to give you a sense of our prices. So this is pre-discount right here on the screen. So take this and apply a 20% discount to this. But we have an essentials package, which is a $500 a month package. And that is going to come with an analyst who's going to update your model every single quarter and run some reports for you as well, just to give you some great reporting functionality that you can use to communicate with your investors. Growth reports, same thing, but monthly, and more detailed and more granular reports, all the way up to CFO, which is going to give you some proactive leadership with a fractional CFO on your team. And with that, I'm right at where I wanted to be, 3:45 my time. So that gives us 15 minutes of Q&A. So I'm actually going to turn my screen sharing off, and we can make our way through some of these questions.
Awesome. Thank you so much, Logan, for a first round through that. I think that was incredibly informative.
Well,
I think we should actually get like a spicier name for the next one, because I think the principles in this have way more to do with even getting funding than presuming you've already gotten the funding and how to keep people up to date. And with that, I'm going to sweep a question, a recent question, then I'll go back to the beginning. So don't worry, Dr. Ahmed. But do you share the monthly update email with potential investors as well as current investors?
We do, honestly. And so the way that we do it is Paper Street allows you to have multiple different groups of people. So we have a list of a bunch of contacts. I think most of them will do this, but I can bucket people into current investors, potential investors, customers, partners, all of that stuff. And you have some people that'll fit in multiple groups. And so what we do is we have one email that we send out to current investors that are actually invested. And then we have one email that we send out to just everybody, right? And so the content is going to be, so we don't send the same email to both of them. The content is almost the same, like it's like 90% the same, but there are some things that are more pertinent to our current investors, like if we're asking for pro rata, if we're doing a fundraise, if we're, talking about options that were granted, things like that, that just doesn't make sense to share with the entire community, then we'll do that for those. But generally, yeah, I mean, anything that we would share with our current investor base, we would share with potential investors as well, generally. But that's just our culture. That's how we operate. Some people are different.
Yeah, I think the asks is probably the most important thing to share far and wide. Asks and challenges in a modern day organization. I think you would want to be like, especially angel investors and certain investors, like privacy is a concern. So you would never want to do deal negotiations on an open email chain or something like that, during a funding round.
Yeah, I would agree.
Dr. Ahmed has a layered question, but I believe what it is finding the distinctions between these, deal room kind of products. He got apparently a $15,000 deal with Ansarada, which was something I wasn't even familiar with, but I took a look while you were talking, and it is basically like an M&A private equity platform that claims to be powered by AI. That's like super later stage kind of stuff. That's probably way more complicated than most startups need. At the end of the day, to me, like a folder structure is enough, and it's just the one that works the best for you guys. Honestly, I've seen Series B, Series C rounds get done with Dropbox and Google Drive and things like that. A lot of it is just the friction. And Logan, when he showed his deal room or data room, that is 99% of data rooms, 0 to whatever, 14 or something like that, folders that cover the main things. There's tons of things online. I'm sure the stuff that you shared in the templates in the chat will cover that.
Yeah, that's definitely, standard. I would not, I mean, unless your company is doing $100 million of revenue or something like that, I would not spend $15,000 on, what sounds like a glorified AI folder type of structure thing. It's just Google Drive, something like that, Dropbox, that's plenty, and it's $0, just a little bit of time.
Yeah.
So, yeah.
Even if so the funny thing about our space and why I think it's sometimes so hard to get clarity is because the same terms are used from startup to IPO, and the kinds of solutions for those things are like the ones that handle more complicated scenarios actually slow down simpler scenarios. So there's cap table management tools out there like called Solium that are used by venture capital firms, to manage billions of dollars of investments. And now you have thousands of shareholders and tons of crazy rights and things like that. And you hire armies of people, paralegals and accountants and people with C's and A's and things like that, who like go through this data. It's their job to show up and like interpret, private company valuations and secondary transactions and things like that. But before Series A, even before Series B, a lot of this stuff is like, it's graspable in a single human mind, and it can be put in a spreadsheet with a handful of tabs. So if you find yourself like behind the McLaren of cap table management solution when you're a 2-year-old company, you're probably overpaying and you're not going to use most of the features on it.
Yeah, totally agree with that.
Here we go. We got another one from David Sneed. Do you have the same letter to investors and your outside supporters? So a bit of a wrinkle on the first question.
Yes. Yeah. So basically, yeah, it's the same deal, but like generally the way that we structure it, you can do it whatever makes sense for you. The important thing is that you're just getting regular communication out to the people that you care to get the communication to. The way that we do it is we just have 2 different emails to go out every month. One email that's for people that have written us a check, that the check is in the bank account, and then one for everybody else, right? That's how we segment it. So the everybody else one is potential future investors, customers, things like that. Now you could do one, in theory, it'd be more work, but you could do one for current investors, one for potential investors, one for customers, one for this, one for that, and segment it all out, to the nth degree. That's just how we do it. We just do it in kind of like yeah.
And it'll probably change based on if you don't have any investors. There's really only one email to send in the beginning.
Yeah, big time.
We got a question about, and I'm assuming this is no, but you can answer this. The data room drive that you showed, is that available so they can take a look at? Specifically curious about that memo.
Oh,
I'm
the
pretty sure you
memo.
don't share your salaries with the entire world.
Yeah, we likely, so we're very transparent. We don't share our data room with everybody just because there's like, very kind of like distinct different. What I would do is I would look at the template because I believe that we have a template for the investor memo in there. And if not, just email me directly. And Jimmy, if you want to just put my email in, or even do it in the chat, Logan at forecastr.co. Just email me and I'll do what I can to help. But yeah, I probably won't just publish our data room to everybody right now.
Yeah, and another thing about data rooms and what the industry will call trade secrets is they do end up in data rooms. So if you have patents, if you have trade secrets, if you have things that are essential to you, doing your business, they often end up in parts of the data room. And usually that's what you don't share your data room with an investor on your first pitch. You don't be like, hey, are you interested in my company? Like, here's what we're doing. Have our data room, dig in and tell me if you're interested. You want to find out that interest is, near closing kind of things. Like it's a relationship that kind of goes by resolution as more and more conversations are had. But what I think Logan is talking about is once the investment has been made, that data room is available to the investors who have skin in the game in the company. And like they should be able to research that stuff because it is their best interest to not steal your trade secrets or to like use the data in the data room in some nefarious way. They're going to use it to help you because they want you to be successful because literally they have a piece of your company.
100%. No, that's 100% correct.
Sandy, I may need more clarity on this. They've been used to estimating the run-of-the-mill software development income, balance sheets, financial statements, but with Chat GPT, Bard, etc., code is already available. Sandy, if you could clarify what that question means. Are you saying that the income of a developer should be estimated differently now because of the advent of AI tools that can help code? I don't know how that's relevant to necessarily the data room or anything like that, but let us know. What else do we have? Oh yeah, Sandy, I will actually pull you up if you want to clarify your question. Give me 1 second. There you go. You should be able to talk now.
Yeah, I'm assuming you can hear me now.
Yep. We're good.
So both Logan and Ryan, I have done software development for many, many years. And it's very easy because the processes are simple. Whether you use a typical sprint process, the new one, or the old way, it's kind of requirements, architecture, design, implementation, QA, and kind of follow the old model. But with AI coming into picture, I don't even know how to start estimating if I were to put an AI layer on top of whatever I'm doing. And whether it's Chat GPT or Bard or, it's immaterial of what you're using. But how do you estimate, if I have 15 modules, AI modules in my architecture, how do I go about even estimating?
Estimating the cost, is that what you're asking?
Yeah.
Estimating the cost.
Because some of it is available, some of it is code, somebody has to do something new. I mean, it's a mix. And I'm more than happy to have a 10-minute call separately so I can actually show you the picture.
So I can speak to that, and Ryan, I'd be curious to get your opinion too. But I have no silver bullet for you, and I'm far from an expert in understanding the cost of emerging technology that's changing every single day. The best piece of advice that I could give you whenever it comes to just estimating, your cost for adding different things to your application is just find somebody that you feel you have a high degree of confidence that knows that space very well. Find somebody that successfully implemented AI in their technology. Find somebody that knows AI incredibly well and talk to that person and tell them that you're having an issue figuring out what something should cost and talking to them about it. And like you across the board, that's my biggest piece of advice for any startup founders is if you have a problem like that and you don't know the answer and you're like, I don't know where to go, find a person, find somebody and I need you to mentor me through this. And people want to help people. I think you'd be surprised at how far you can get whenever you just leverage your network.
Yeah, I'll do that. Thank you very much.
And I would
No,
actually
go
tie
ahead,
that
Ryan.
back to Logan's initial point with the defense and offense strategy on investors, in something that I think many startups underutilize and make some mistakes in, especially once they have some money, is when they need to hire into. So when you found a company, whether you're co-founders, even a trio of founders, you're wearing all the hats, but you do not all have deep expertise in all the disciplines. So in my mind, every role exists in a startup at the first day it is created, even if it's a solo founder. So if you're a solo founder, you're the CRO, you're the CTO, you're the CEO, you're the sales rep, you're the back-end engineer, everything, until you either do that poorly enough but succeed in other ways that you can hire somebody to do that better than you, or it's your discipline that you can focus on more and more as you kind of fill out the other things. And I think a lot of people, when they go to hire outside of their discipline, they think of two very dangerous things. One is, I've been scrapping together to try and figure this out, and I have no experience in it, and I've gotten thus far. This is me when it comes to marketing. I've sent out thousands of marketing emails over the last 2 years, and I am an engineer by training, like a software developer, director. That was my early days. And the assumption that, like, well, as soon as I hire somebody who is a marketer, like, there's just all this like low hanging fruit, and they're just going to blow me away. And even if I hire a basic marketer, like, they'll do better than I am because that's their discipline. I think it's a huge mistake for startups, because they don't know how to evaluate that kind of talent. And I think, to the theme of this webinar, getting investors or advisors or people who have seen hundreds, thousands of companies and seen them run in different things can be a huge help in finding that kind of talent, especially if it's outside of your expertise. Theme of the webinar. Thoughts on AI and development? Like Logan said, we're early days yet. What I have seen it most useful for and most impressive is building apps from scratch and generating a lot of code when there is no other stuff to work on. And I think that wows a lot of people. Where I think it's actually going is a bit more like continuous integration did to the software development world, which is, it is going to be a huge asset to people who have experience, because it is going to level up the ability to ship code. And I don't think it's going to be like it writes itself anymore, but it's the ability to kind of understand. Like, I don't think the salaries of software engineers are going to take a nosedive anytime soon, but I think there's going to be little pockets of software engineering that are going to get incredibly more efficient, and hopefully less of a pain, because most of the best stuff that it does is dealing with tedious work, boilerplate, stitching stuff together. I will personally say I use ChatGPT as a command line superpower, because I'm kind of an old Linux nerd. I know all the command line things like sed and awk and xargs and crap. Stringing that stuff together, like in my past life at Boeing, like the difference between a super senior engineer and a new starter is like how crazy you could get in a one command line piped thing. I use it all the time now to manipulate data that just like pops out of a HubSpot form or some random data dump. And I'm like, oh yeah, I could pipe this through like several things and like convert this or do that. But I just say, but the robot can do it a lot faster, and I don't have to remember the weird incantations of sed and awk. So instead I just say, like, hey, ChatGPT, can you take this blob of data and, take away the semicolons, get rid of the JSON, format it in this way, remove these kind of things, and like, bing, there it is. Save myself 30 minutes.
Wonderful. Thank you, Logan and Ryan. I appreciate your answer. I think I was going to do exactly what Logan said. I was thinking of going to Fiverr and figure out
find an expert.
Find an expert and get them to quote me. And then if I have five enough, then
and I will say,
spread.
The market adjusts. If I could start a software development firm right now, and the next day that I could charge $25 an hour rather than $250 an hour to produce the same value of software, I would do that tomorrow. I don't think we're there yet. I have a lot of friends who are software development firms, but I think we'll start to see the market correct pretty quickly, and somebody start to run circles around things if there's really something there. Sorry, that's a lot of pontificating for this very thing, but thank you so much for jumping up on stage and asking that question. That was fun to riff on. I got one more, Logan, for you, and I think we'll have to wrap.
Okay, what we got?
See you. Last one's anonymous. Update letters quarterly versus monthly. As a healthcare company, trials take a long time. It doesn't seem like the monthly updates are going to be anything more than still waiting on results.
Yeah, I mean, so which if that's truly what's going on in the company, then that may be what's going on in the company. But it's like, and maybe I don't fully understand kind of what, but if truly you're not doing anything other than just like sitting around waiting for results, like, I mean, there are other things I would think that you would be doing as well, like, going to conferences, like, networking, like trying to find partners, like things like just like anything that's important for you to do in the business, I would just update on. But at the end of the day, it's, your business, more than I do. So if you literally look at it and you're like, there truly is nothing I could possibly say in here that is going to be of any value to anybody, to maybe just do it quarterly. But I would push you on that, and I would say you're probably doing stuff. You just, in your mind, you might not think it's super important, but it probably is.
And one thing, Logan, that I recognized, which was really interesting for me, like I just revealed, I have an engineering and like product-y kind of background in your updates, and I think it's still there. But definitely in the early days, you guys literally shared your sprint schedule. You didn't talk about it a ton, but you literally like how much you're taking on, how much you're delivering. So even just demonstrating the team's ability to deliver and improve, if it's something that's like, hey, this is an 18-month timeline before we get a signal on this, that's still something that's going to completely change the game. Like I've said many times before, when Logan finally had a version of Forecastr up and running that was usable and purchasable, and he said, hey, can we do maybe an event together? I said yes without even thinking about it, because I was already exposed to 18 months of team updates and seeing that the team can ship, that they run into issues and they overcome them, that they acknowledge hard truths and stuff like that. If it had been a cold call, or if you'd emailed me, a year and a half earlier, and then just hit me again after that amount of time and said, hey, should we do a thing? I'd have been like, oh, like, let's maybe hop on a call. Let's talk about it. Let me see where you're at. Show me the product. Tell me about what's happening. It just takes so much longer. But really, that beat of information, it almost puts the onus on the receiver of the information to put the story together in their head rather than putting it back on the tellers of the story.
100%. Yeah.
Awesome. Well, we got a lot of good feedback questions. Thank you so much for asking questions that are just praise. I love those. Sorry for taking 3 more minutes, but this is a ton of fun, Logan. I think we should redo the whole Art of War again in a couple months. Be on the lookout for more. We have a financial model teardown coming up, I think, in 2 weeks, which should be a ton of fun.
Yep.
We do those every other month or so, or maybe once a month now, where rather than talk about the generalities of it, we actually take 2 real founders and their financial models, and the Forecastr team tears them down. But in reality, they look at them, they build them up, they talk about, they kind of grade them on a report card basis and talk about where things could be improved. We get tons of engagement out of those. People really, really like that. And it's, I said it many times before, a lot of this stuff is vague and high level, but when you get to see it, real, it really helps some of the concepts to sink in. So be on the lookout for more from us in that. And yeah, everybody get the recording of this in a couple days. And Logan, Jimmy, thanks for manning the chat with me. Have a great week, everybody. Thank you.
See y'all. Bye.